Most investors believe wealth is built by choosing the right product, the right mutual fund, the right stock, or by entering the market at the right time. But professionals understand something very different. Wealth is not built by products, it is built by structure. And structure always begins with goals. This is the foundation of goal-based investing. Goal-based investing shifts the question from what should I buy to what am I actually funding? A home down payment, a child education, a wedding, retirement independence. Each goal has its own timeline, future cost, and tolerance for risk. And unless these are clearly defined, investing becomes reactive instead of intentional. In goal-based investing, goals are first classified. Short-term goals, 2 to 3 years, where capital protection matter most. Medium-term goals, 5 to 7 years, where balance becomes critical. And long-term goals, 10 years and more, where growth and compounding do the heavy lifting. Once goals are identified, they are quantified. Future costs are adjusted for inflation because in India, ignoring 6 to 7% inflation is not an option. Timelines are mapped clearly and most importantly, true risk capacity is assessed based on income, stability, responsibility, life realities, not just age or emotion. Only after this process do investments enter the conversation. Portfolios are built backwards from goals, not forward from product. This is why a personalized framework is no longer optional, it is essential. This is where GBBI, goal-based boutique intelligence, comes in. GBBI takes goal-based investing and applies institutional thinking to it. Instead of generic templates, it builds personalized financial architectures. Instead of product-driven advice, it offers unbiased guidance. Instead of static portfolios, it uses research-backed portfolio engineering with continuous calibration as life evolves. Income changes, responsibilities grow, goals shift. GBBI adapts portfolios accordingly, quietly, systematically, and without emotion. Because wealth creation today is not about savings alone. Savings protect today, but investing is what builds tomorrow. In an economy where inflation steadily erodes purchasing power, capital must grow meaningfully over time. This requires structured exposure across assets, equity for growth, debt for stability, and select alternatives for diversification. So portfolios compound steadily across market cycles. Yet numbers alone don't decide outcomes, behavior does. Most investors don't lose money because market fall. They lose money because they panic, chase noise, or abandon discipline. Goal-based investing solves this problem at the root. When investments are tied to clearly defined goals, behavior improves naturally. You stay invested because the goals are anchored around decisions, not product, no pressure, just clarity. You don't panic during volatility because buffers are already built in, and you remain consistent because progress is measurable. Imagine a market correction just before a child education milestone. A goal-aligned portfolio already account for that risk. So decisions remain calm, not reactive. When financial decisions are roadmap driven, outcomes become more predictable. When portfolios are aligned with real life goals, market fluctuation feel manageable, not threatening. And when wealth is structured properly, peace of mind becomes a byproduct. This is the true value of goal-based investing. And this is the intelligence behind GBBI. Because serious goals deserve more than guesses. They deserve clarity, structure, and long-term thinking. If you want to understand how your goals translate into a clear financial roadmap, you can begin with structure goal assessment at Rubik Wealth.